Welcome back to the Daily Crypto Roundup, the show that cuts through all the noise and gives you the real picture of what's moving the market today. It's been another strange day for crypto. Not particularly explosive, not particularly dramatic, but one of those sessions where the deeper you look, the more interesting the signals actually become. We've got sideways movement in some places, quiet strength in others, and a few stories today that might tell us more about what's coming next week than what's happening right now. We'll get into all of that, but before we dive into the markets, we need to start with something a bit special. A huge congratulations to RR84 and Budman, who each picked up 50 XRP in yesterday's Christmas giveaway. Both prizes have now been paid out, and honestly, the support behind this has been unreal. We hit our target faster than we thought possible, smashed it in less than a week, and because of that, we're stepping the whole thing up. If we hit 300 ratings, we'll send out another 50 XRP to a listener. If we hit 400, another. And if we somehow reach our stretch target of 500 ratings, we'll give out yet another 50 XRP. Every milestone unlocks a winner. And starting today, we're adding a weekly prize too. 10 XRP for the best comment of the week, and 5 XRP to a random comment. The more you comment, the more chances you have, even if it's just a quick emoji. We know loads of you listen while driving, so drop it in whenever it's safe. And of course, if you've already rated the show 5 stars, just comment "done" so we can add you to the list. Right, let's get into the market. Bitcoin's holding steady around $87,000, and while it's not exactly breaking out, the important thing is that sellers seem to have dried up for now. Ethereum's sitting just below that $3,000 mark, hovering around $2,900, still struggling with that big psychological wall, but refusing to give up ground. XRP's at around $2.23, pretty stable after a slightly quieter week. BNB continues to flex its strength at $875, one of the least volatile majors right now, and quietly one of the strongest performers over the past few months. Solana's around $144, proving once again how different this Sol cycle feels compared to previous ones. Dips just don't take it down like they used to. Tron's at 28 cents. Dogecoin at around 15.5 cents. Cardano sitting at 43 cents. Litecoin holding firm around $85, and Bitcoin Cash just under $540. The story those prices tell is simple. The market isn't euphoric, but it's not panicking either. It's stabilizing. And that's exactly what links into our first major story of the day. The broader market rebound that saw more than 80 of the top 100 cryptocurrencies turn green. The total market cap climbed back toward the 3.1 trillion mark. And what's really interesting is that this move didn't feel like a relief rally. It felt like a reset. You didn't see the big, violent upside candles. You didn't see the aggressive short squeezes. You just saw slow, steady strength. A few analysts have actually commented on this today. One from K33 Research described Bitcoin as a strong relative buy, and that's a line worth paying attention to. When an institutional desk uses the word relative, it usually means they've compared Bitcoin's recent performance to other risk assets, equities, commodities, even real estate proxies, and decided it's undervalued on a comparative basis. They're not talking about hype. They're talking about fundamentals. They're talking about where money is likely to flow next. And that institutional lens is central to our next story. Because while Bitcoin's price movement has been muted, the sentiment behind the scenes has been shifting. The analyst calling BTC a strong relative buy said the sell-off we had might already be saturated. In other words, the worst of the correction may have already happened. And when you pair that with the market-wide rebound in altcoins, it starts to paint a picture that today's sideways action is less about weakness and more about digestion. Now we move on to something a bit different, and honestly, this is one of the more interesting developments of the day. Grayscale has filed for a spot Zcash ETF. Yes, a privacy coin ETF. It almost sounds like something that shouldn't be happening, yet here we are. Zcash is not exactly Bitcoin, it's not Ethereum, it doesn't have institutional dominance, but it does have a unique regulatory challenge: privacy. So the fact that Grayscale, the biggest digital asset manager in the world, wants to bring a privacy coin into the ETF world, tells you something about where they think regulation is heading. They're not doing this on a whim. They're preparing for an era where privacy-focused assets can coexist with regulatory oversight. And that alone is a huge shift from even 2 years ago. And because this story ties directly into the theme of decentralization, it blends perfectly with another headline today: the launch of a new decentralized, no-KYC peer-to-peer trading platform supporting more than 30 cryptocurrencies. This is a powerful counter-narrative to the ETF story. On one side, you have institutions packaging crypto into regulated financial products. On the other, you have developers creating systems that cut out the middlemen entirely, and both are growing at the same time. That duality, more regulation and more decentralization, is becoming one of the defining features of this cycle. Before we get into the whale activity and what that might mean for an early altcoin rotation, we're going to take a quick break for a word from our sponsors. We'll be back in just a moment.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
One thing that always separates the quiet parts of the market from the chaotic ones is whale behavior. Retail moves on emotion, institutions move on macro, but whales, the serious early money players, move on structure. And the structure right now is interesting. Today's big headline centers on whale accumulation in a smaller altcoin that's been dipping over the last few sessions. Now, this isn't about the specific coin itself. It's about what the behavior represents. Accumulation during pullbacks is one of the earliest signs that whales believe a rotation is forming. You tend to see it right before liquidity shifts from majors into mid-caps and then into smaller alts. It's like the first tremor before a rotation wave begins. And the most interesting part is that this accumulation isn't happening during a green week. It's happening during a consolidation phase. Whales aren't chasing pumps. They're positioning themselves before the next move. That's always a better sign than anything you'll read on social media. It also ties neatly into the broader consolidation theme across the entire market today. Bitcoin hovering around that 87,000 mark and Ethereum stuck beneath $3,000 has created this feeling across the market that everyone's waiting for someone else to make the first move. It's like the market has collectively pulled the handbrake up. But under the surface, the data doesn't actually reflect hesitation. It reflects preparation. Consolidation phases can feel boring, they can feel slow, they can feel directionless. But historically, they have been the moments where the foundations shift the most. That's exactly what analysts were pointing out today. Several of them highlighted that this price action is not the kind you get before a breakdown. Breakdowns are usually loud. They come with spikes in volatility, aggressive liquidations, and emotional selling. Today's movement had none of that. In fact, the volatility was almost completely muted. Bitcoin didn't show any appetite to move lower, and every time it dipped even slightly, it got bought back instantly. That is the signature of a market that's reaccumulating, not a market that's capitulating. An economic analyst in today's coverage described it perfectly. Crypto is behaving like an asset that knows something the wider market doesn't. And that's such a clean way of looking at it. Cryptocurrency tends to do one of two things during periods of consolidation. Either it drifts slowly into weakness, or it builds its next base. Everything about the structure today suggests the latter. And that sets the stage for the story we touched on earlier. The broader market being up, with more than 80 of the top 100 coins turning green. This wasn't a euphoric rally. It wasn't driven by hype. It wasn't led by a random token exploding 50%. It was broad, it was balanced, it was measured. That's the healthiest kind of recovery you can get. Because when an entire market moves at once, it means sentiment is stabilizing across the board. Even the smaller altcoins, The ones that usually whipsaw around wildly have started settling. A few mid-caps ticked upward today, and the majors held their ground. It doesn't feel like a bull market, but it also doesn't feel anything like a bear market. It feels like a market resetting itself. Now let's circle back to that combination story from earlier, the Grayscale Zcash ETF filing and the launch of the decentralized no-KYC platform, because they reflect the two extremes of where this space is heading. One path is hyper-regulated, institutional grade, compliant to the teeth. The other is pure decentralization, self-custody, anonymity, and open access. What's interesting is that both sides are growing simultaneously. That never used to happen. Historically, when regulatory pressure increased, decentralized platforms exploded. And whenever decentralized platforms struggled, regulation tightened. But in this cycle, both sides seem to be expanding at the same time. ETFs gaining institutional traction while grassroots decentralized systems push forward is a sign of maturity, not fragmentation. It's also a sign that crypto is moving into its everything adopts everything phase. Regulation and decentralization aren't pulling in opposite directions anymore. They're creating two lanes on the same motorway, moving toward the same destination. It's exactly what early technologists predicted would happen once the ecosystem matured enough to support both extremes. The P2P no-KYC platform launched today speaks to that grassroots privacy demand, people wanting sovereignty over their own assets, wanting to step away from surveillance finance. Meanwhile, the Zcash ETF indicates that institutions believe privacy assets will eventually be fully absorbed into the regulated market. Two sides of the same coin. And that brings us to the final story of the day. The overall consolidation of the crypto market heading toward the weekend. BTC steady near 87,000. ETH unable to clear that big 3,000 barrier. Altcoins drifting sideways, and a sense of cautious optimism as the dust settles from last week's volatility. The important thing to understand here is that consolidation is not weakness. Consolidation is the absence of panic. It's the period where markets breathe, where traders reset, where liquidations clear out, and where the next real move begins to form. We've said this on the show before, and it's worth repeating because it remains true. Markets don't explode upward from chaos. They explode upward from calm. Calmness is structure. Calmness is stability. Calmness is what creates the pressure that eventually gets released. And right now, the market feels calm but loaded. Like everyone is waiting for the next signal, whether it's macro data, ETF flows, or a big institutional headline. When the calm breaks, it usually breaks fast. Before we wrap, don't forget starting today. Every Friday from now on, we're giving away 10 XRP to the best comment of the week and 5 XRP to a random comment. Even a single emoji enters you into the draw. We know loads of you listen while driving, but when you get a minute later on, drop something in. It massively helps the show grow, and we want to give something back for that. And as always, if you've left a 5-star rating, just comment "done" so we can add you to the list. Thanks as always for tuning in, thanks for supporting the show, and thanks for helping push this thing to levels we honestly didn't expect this quickly. Drop your thoughts in the comments, follow the show for the next episode, and as always, we will see you at the top.